This market update is brought to you by Mercaris. Mercaris is the nation's leading market information service for organic and non-GMO agricultural commodities. At Mercaris.com, you can find up-to-date information on market conditions for organic and non-GMO commodities, including import and export information, acreage and production estimates, and timely commodity pricing information. Visit Mercaris.com for more information. Or for agricultural producers, visit Mercaris.com/farmer to sign up for Mercaris' free farmer plan.
Hi, this is Ryan Koory, Director of Economics here at Mercaris, here to provide your June market update for the organic sector in the U.S. Looking at planting and weather this spring, so far things are looking really well on the planting front, particularly compared to last year. We estimate that as of June 6th, about 95% of organic corn and about 84% of organic soybean acres were planted in the U.S. And that's about 2 weeks to 3 weeks ahead of where we were last year. On top of that, the percentage of crop rate of good to excellent is sitting much better than it was last year, right around the 5-year average. So all in all, in terms of planting and emergence and in terms of the overall quality of the crop at this point in the year, we're looking much better than we were at this point last year.
Any indications as far as what weather trends are happening across the country?
Yeah, I think pretty much everyone knows that as you're looking at this last week of June, we're looking for some warmer and wet conditions to come in across the central corn belt and the eastern corn belt. And so that should be a pretty good little boost to everyone who's got their crops in. The one thing that does look a little bit concerning is it looks like we're starting to develop some dryness to the south and to the west a little bit. Looking at Texas, Oklahoma, Kansas, Colorado, we're definitely starting to see the emergence of potentially some drought patterns there. And then looking a little farther north into Nebraska, I was recently listening to a report that they're starting to see some dryness there, not only warm, dry conditions, but some wind as well that may be drying out some soil moisture and could start to produce a bit of a challenge as we get farther into this year.
And what would be some of the crops that would be coming out of those regions just to watch moving forward if those dry conditions do persist?
Yeah, looking at Nebraska, that's pretty classic Corn Belt region, so you're talking about your corn, wheat, soybeans. But if you look a little farther south, looking at Texas, Oklahoma, Colorado, that area, you're starting to get into some pretty substantial dairy country. Organic dairy has grown pretty robustly there. And looking at Texas particularly and into Oklahoma, their trend has been to produce more corn silage and more alfalfa. Really what you're looking at are the crops that go into producing dairy feed. So if we start to see these dry weather conditions persist or accelerate, you could see a situation in which that part of the U.S. is going to start to try and fill some demand that they can't source locally. And so we could start to see some pull in the market that direction. Looking at livestock, over April we saw the slowdown in the organic broiler slaughter in the U.S., and it contracted about 24% year over year over the month of April. And that dragged into May a little bit too, but by the end of May we were actually pretty well out of that decline, and by the first week of June we were actually looking at 16% higher year over year for that final week of June. So that slowdown we saw in organic broiler slaughter seems to have corrected itself, and if anything we're sitting a little bit better now. Organic turkey production continues to remain pretty phenomenal. Turkey slaughter was up about 50,000 head over the first week of June compared to the prior year. And if you're looking at the month of June overall, we're about double the same period we were in 2019 in terms of the number of head slaughter. Or I'm sorry, looking at the month of May rather, here about double the number of head you were in 2019. So we're looking at really good slaughter rates with organic turkey slaughter. And then, kind of rounding out, looking at organic dairy and looking at organic eggs, they've both stayed pretty steady through the COVID downturn, with a lot of their demand being in grocery stores, not really relying on those restaurant supply chains that got disrupted. we've seen production and inventory levels stay pretty constant with where they were earlier this year, just a little bit above last year. And prices may be carrying a little bit more of a premium than they were at this point last year, just because of that uptick in consumer demand.
Those broiler and turkey numbers are pretty phenomenal. Is there any indication whether those are COVID-driven or just the general increase in demand?
Yeah, with looking at broilers, there's a potential there that we may see some impact of COVID. Talking about what we saw over April and May, again, with that substantial decline, prior to that, if you're looking back at March, February, we were sitting about 3 to 4% higher year over year in our slaughter numbers. And then we had that substantial decline over those 2 months, and then to pop up and be 16% higher year over that first week of June, we're definitely sitting higher on our slaughter rate than we were pre-COVID. Now, that 16% higher, is that just a blip on the radar, or is this something we're going to see throughout June and into July? We're really curious to see those numbers as well, but I think that 16% may be an indication of some bounce back and some drive from COVID, but it's a little too early to really call it on that one. And looking at turkey slaughter's just been great this year. I believe through the first half of this year, we're sitting somewhere around 200% higher than we were through 2019. So really this year we've just seen a pretty phenomenal acceleration in organic turkey production, and that seems to be one of the big areas of growth right now within the organic livestock sector. So those turkey numbers, they're more a continuation of what we saw before COVID than really any kind of bounce back or reaction to. So looking at import numbers with the month of May on the books, I think what we saw in May is maybe the first signs of COVID-19 impacting imports within the U.S. And really with that impact, what we're talking about is organic soybean meal. Looking back a little bit over March and April, we did see soybean meal imports dip just a little bit year over year. But in May, we actually saw organic soybean meal imports drop 66% year over year, which is the largest year-over-year decline that we have on record since we started monitoring organic soybean meal imports in 2015. It's a pretty substantial decline. And really that decline is pretty consistent with the reports that we were getting out of India. Part of one of the faults with the soybean meal imports is we are very reliant on India as a country of origin. I think we source something like 90% of our soybean meal from that country. And the reports from India continue to suggest that they're having issues with labor shortages and container space at the ports, and that's creating a snarl for their exports. And so that 66% drop, that could easily be a sign of, something that we're going to see in, over June and maybe into July. And if that's the case, then we could really start to see that shape the outlook for imports this year. Moving on from soybean meal imports, the rest of the organic import complex looks pretty consistent with what we were seeing before COVID. I don't know that we're really seeing much impact there. Whole corn imports continue to trend just a little bit above where they were last year. Cracked corn imports are pretty well holding the same trend that they were, down about 30% from last year. And looking at soybeans, whole soybeans, we are starting to see whole soybean imports drop off. But that's a pretty consistent seasonal factor where over the summer months we see imports from Argentina, which is one of our larger suppliers. They tend to decline, and that seems to lead to a lower pace of imports from organic soybean imports over the summer months. So really, soybean meal seems to be showing some weakness, but the rest of the import complex seems to be steady as it goes.
On soybean meal, any indication of how the end users of that soybean meal are mitigating that lack of availability, and any chance that could affect pricing down the road?
Yeah, you're really talking about imports over the month of May, and so anybody who's using soybean meal as a feed ingredient is probably still situated pretty well at the moment. But if we see this trend persist into June and July, as I was mentioning a moment ago, then you'll start to see a situation where this definitely starts to tighten up the soybean meal supply situation in the U.S. And with that supply situation tightening up, that could lead to some price support for the entire organic soy complex, whether it be soybean meal or whole soybeans. So not quite yet, but I definitely would expect that if we see this pattern persist over the rest of the summer into Q3, then there's definitely room to start to see some upward pressure. So looking at prices in May and into June, we're pretty much seeing a continuation of the price trends that we talked about last month. For the 2-week period ending June 6th, the Mercaris Market Price Survey recorded the U.S. delivered organic feed corn price at $6.85 a bushel, down more than $1 from the start of May. So we're seeing organic corn prices continue to get drugged down by the weight of this market. Looking at organic soybeans continue to hold steady. Our market price survey measured organic feed grade soybeans delivered to the U.S. at about $19.50 per bushel for the 2-week period ending June, which is June 6th rather, which is pretty consistent with what we saw in May. And then looking at organic feed grade wheat, feed grade wheat pretty well rides organic feed grade corn, and with that downward pressure we see in corn, we're seeing feed grade wheat prices trend lower. That same 2-week period over the month of May, we saw organic feed grade wheat average $18.80 a bushel, which is down from June, which was at $9.50 per bushel.
So overall, just where do you see any potential for any upswings or downswings this summer on any pricing?
Yeah, I think looking at this summer, there's a couple of reasons to think that we may see prices trend a little bit higher. One being that import situation we were previously discussing. If we do see imports of organic soybean meal substantially tighten, that could really change the supply situation in the U.S., and that would definitely be supportive of soy and soybean meal prices. And then looking at corn and looking at wheat, we do have some dryness patterns that are developing to the south and to the west, and if those do escalate and they do start to tighten up the feed outlook in those parts of the country, then we could start to see some demand pull from particularly your large dairy processors in that part of the U.S., and that too could add some upward support for prices over the summer. The last thing I'd like to touch on is in June, the OTA, Organic Trade Association, released its 2019 organic sales survey numbers. And with those numbers, what we saw is in the U.S. organic food sales exceeded $50 billion last year for the first time, which is about a 5% growth from the prior year. So another year of pretty substantial growth within the organic industry in the U.S. And then slicing those numbers down a little bit, looking at the meat, dairy, and egg sectors, we saw that sales last year reached about $8.1 billion, which is about 3.2% higher from the prior year. A lot of that growth continues to be from eggs and from broilers. I think the organic dairy sector grew about 1% to 2%. So the majority of that growth is coming from your eggs and your broilers, your poultry sector. And then looking at your snack foods, breads, and grains, they grew about 6.4% year over year to about $8.7 billion. And that's a pretty good clip. And that just goes to show that within the grocery store space, consumers are continuing to choose things like loaves of organic bread, organic flour, organic cereals, organic snack bars, things of that nature. So both of those numbers, they paint a pretty good picture for demand growth last year in the organic sector.
And were there any other noticeable up or down trends from this report?
Yeah, some of the strongest growth that we saw were in sections that aren't really directly connected to field crop farmers, like fruits and vegetables, and in things like packaged dinners and things of that nature. Those all saw pretty solid growth last year. One of the things that I think is probably real fascinating about the OTA report that's not necessarily included in it directly is with that 5% growth we saw last year, that was in a market year that didn't see COVID-19 as an impact. And one of the things that COVID-19 has done to the U.S. consumer profile is it's pushed all that demand, or a substantial amount of demand, out of restaurants and into grocery stores where organic consumers interact with organic goods much more strongly. So with that 5% that we saw last year, we could see that number hit 8 or 10% this year due to the fact that we are getting a much bigger presence within the grocery store space of consumers and more consumers interacting with organic goods. And with that, if the organic industry is able to use this opportunity of increased engagement with consumers to really build consumer loyalties and to introduce themselves to consumers' budgets and consumers' diets, then that could be a trend that we carry not just into 2021 or through 2020, but potentially longer. So, one of the, dare say, silver linings of this situation is that it does create the situation in which we could see increased consumer interaction with organic goods and increased organic sales.
Well, that's some exciting news for the organic marketplace and definitely something to watch moving forward. And I think that's a good place to wrap up. So thanks a lot for being on again, Ryan, for the June market report, and we'll be back in July.
Thank you much, Brian. I appreciate it.